Not sure if you guys heard, but Trump is back. And with his victory, the San Francisco housing market is about to experience its biggest shakeup in decades. While homes in San Francisco have been selling at a median price of about $1.5 million in around 19 days, which is still really fast by industry standards, Trump's return is going to completely transform all of that. Some say it's going to destroy the housing market, him being in office, and others say it's going to continue to make housing great again. But here's what's really going to happen. Presently, we're witnessing a tale of two different San Franciscos. It's literally a split story, with homes in the Sunset District, for example, flying off the shelves and selling sometimes in just a few days. But conversely, in some of the luxury markets, we're seeing properties sit a while longer. Right now in the city, homes typically receive about 5 offers. But Trump's policies and how he ultimately wants to impact the housing market on a national level, but specifically what would ripple into this San Francisco market, could dramatically shake that up. In this video, I'm going to break down what the Trump return to the White House and his policies from the administration are going to mean for your property value, for the overall housing market here, and what opportunities it's going to create around real estate in general for both buyers and sellers in this very unique market. Plus, I'll also share which specific neighborhoods within the San Francisco city limits are ultimately going to benefit most from these changes. Now, before we get into some historical context, please, if you guys would just take a moment to like this video so that we can reach more people with its content, and also subscribe to the channel, because as it grows, I can bring about more content like this. My name, if I haven't met you before, is Arjun Dhingra. I work as a mortgage advisor here in the San Francisco Bay Area, where I live with my family. I've been in the industry for about 25 years. I'm a 2-time Taekwondo world champion and former co-head coach for Team USA. Really, my mission is helping people make smarter decisions around taking out mortgage debt. So if you are someone that is looking to move to the San Francisco Bay Area, or you already live here, and if me and my team can be of help to you in any way, making better decisions around recalibrating your debt or actually taking out a mortgage to buy a home in this market, please reach out to us. We would love to help. It's a huge honor and privilege, and you can do so directly through Instagram at Arjun Mortgage. And those are not answered by an assistant or a bot. I actually look at those messages directly right here on my phone. Okay, so let's get into the video here. During Trump's first term, the San Francisco market, like many national real estate markets, was incredibly resilient, despite predictions of a market crash. And there was one that actually happened literally in the hours after his election in 2016. If you remember, historically speaking, the stock market actually sold off dramatically. But then within a matter of hours, it actually rallied and mortgage rates spiked, meaning the bond market was actually crashing. But despite those predictions of a crash during that time, the median home price in San Francisco during his first term reached 1.4 million. But here's what's different this time around. We're starting from a much higher point, because in October of 2024, it was reported and confirmed that we had about an 8% jump, and now that median home price is 1.5 million for this area. And his new policies might accelerate that even more. So let's look at the current market and its current numbers. Currently, homes in the San Francisco market sell on average within 19 days, and they have multiple offers. I said 5 as a number, but there are examples of some homes that have over 10 offers on them. But here is what's fascinating. It's not happening across every single neighborhood. We're literally witnessing a split San Francisco. Some neighborhoods are red hot and others are, I don't want to say struggling, but they're actually just sitting, or it's taking a little bit more time, or what some nationally would refer to as a return to normalcy. Home selling off in a matter of days or minutes is not normal, but it's what we got accustomed to here in San Francisco. So anytime that doesn't happen, it automatically creates panic, like something's wrong with the house, or the price is not right, or the market's about to crash or invert. But it's perfectly normal in other markets outside of San Francisco for homes to sit for 30 or 45 days before they finally sell. But since we're dealing with San Francisco and its own temperaments and sets of emotions, it's either red hot or it's cooling off. But this divide and this whole split of San Francisco is telling us where these opportunities might actually be getting created under a Trump administration and with their policies. So let's recall, if we can actually point to and characterize what Donald Trump is actually in favor of as a businessman. Now, if we look at his past, he is a real estate entrepreneur and developer. Obviously, he had a lot of time in the entertainment business, which is where most of his commentary has landed him in hot water in the present time, but he's free to say whatever he wanted because he wasn't a politician. So if we look at Trump, Trump is a man that is in favor of free-flowing credit and low interest rates. That's what he really thrives upon. He likes environments like that. And it was a big part of his first administration. Capital was flying out of banks, and money was being invested for a variety of reasons, whether it was into community development, going actually into the mortgage market, commercial development, and we had very low interest rates, which basically reached a historical low during the time of COVID, mainly because they had to get cut or reduced to keep the market afloat, and also because the economy and the banks and everyone in DC realized and recognized that housing is such a huge part of the United States economy. When you add it all up, actually, it's somewhere between the areas of 35 and 40% in terms of not just what it as a direct economy, but all the ancillary or adjacent economies to it and how they impact this country's total output. So recognizing that, it was in the best interest of everyone that mortgage rates get low and stay low so that we could continue to stimulate it while the rest of the economy was going through something that it had never experienced in the wake of COVID, shutdown, and supply chain disruption. So here are the three major challenges facing this market right now in San Francisco. We have record low inventories, and it's very difficult for that to change because there's no place to build. You can only really build vertically, but the permitting and construction process is really tied down because of all the red tape and costs and regulations. We also have a rising interest rate environment, which doesn't look like it's going to be cooling off anytime soon, particularly in the wake of what could be returning inflation. Yes, I said it, it could be making a comeback. And if it does, mortgage rates will climb, and that ultimately affects affordability. I mentioned red tape, but those complex local regulations ultimately limit new construction, and it slows the advancement or bringing forth to market what would be new housing inventory for either rent or purchase. But Trump's policies will target all of these areas on a national level, and then we're going to have to see what it will do specifically here in San Francisco, whether the local city will follow suit with some of these national policies, if they'll adopt something similar on their own, or what. But there's no doubt going to be some type of an influence. Now, the Trump administration, in true form to what it did the last time around, is very much in favor of opening up federal land to build more. They want to encourage periphery instruction. They want to scale back regulations and things that really hold back developers and investors from bringing forth good quality housing inventory to this market. And also the creation of opportunity zones, which was not just a tax play for investors, but something that really revitalized a lot of areas. And many of those areas are right here in the Bay Area. So that's what we knew about Trump in the first term. And we're going to see exactly what he's going to do. But I do know and can recognize, as can all of you, that his first priority is going to be to tackle inflation. But here's what makes San Francisco unique. San Francisco has always marched to its own drumbeat. What happens here most of the time is irrespective or completely disconnected from what's going on a national level when it comes to specific industries such as real estate and housing. And when he talks about making housing more affordable, we need to look specifically at those numbers. The current median home price in San Francisco is $1.5 million. The average household income needed to purchase a home is just north of $300,000, and the average monthly mortgage payment attached to such a home in a scenario like that is $9,000 a month. So let me show you how Trump's inflation policies are ultimately going to impact those numbers. Trump has promised to slash interest rates, whether we're talking about the Fed interest rates or mortgage rates, but if you understand how these things work, and I think when he makes those statements, he wasn't understanding it, he can't control any of those rates. Yes, his policies could influence the direction of some of these rates, but he directly cannot just go in and with the swipe of a pen order rates to be at any particular level for mortgage or for banks. But the reality is, aside from what he wants, San Francisco is very complex. Currently, we are seeing mortgage rates hovering just below 7%. And annual forecasts are saying that by well into 2025, we could see those rates drop into the mid 6% range or a little bit lower, but not by much. So when we look at those numbers and we take into account what that projection is, here's what that means in real dollars. If we look at where those rates are, and let's just use a rate of about 6.3%, if we take that $1.5 million home, we're looking at a total monthly mortgage payment of roughly $9,300. If that rate was to be just 1/8% lower, meaning right around 6.1 or 6.2%, you drop the monthly payment by $100. But if rates suddenly, somehow, by some way of a miracle or an economic or global shock, got down as low as 5%, you'd be dropping that payment by over $1,000. But here's what nobody's talking about when doing all their interest rate forecasts, and that is that lower rates would actually push prices higher. Because every time mortgage rates drop roughly 1 percentage point, you get 4 to 5 million buyers re-enter the market. Now, not all of them are here in San Francisco, but a lot of them are. And if we're talking about a national level of that many buyers coming in, it's all relative. And what do you get with more buyers in a marketplace? More demand, more bidding wars, and ultimately higher prices because, again, here in San Francisco, we are so inventory restricted. And the only way to counteract a lot more demand and not have prices spike is if you could somehow flood the market or create a lot of inventory. And San Francisco cannot do that kind of magic. And here is the biggest potential impact from a Trump administration, which is his promise to cut building regulations. Now, he's very much in favor, and I am too, of scaling back onerous, ridiculous, and unnecessary regulations that add costs to development projects and ultimately slow them down and just make people who are sitting behind desks feel more important because they have more things to rummage through and stamp. or not stamp in this case because it's so slow. So here's the sickening number. In San Francisco, regulators on average add roughly $90,000 in additional costs to a new home. And this is because the city, whether you want to defend that or not, faces very unique challenges. There are strict local zoning laws, there's very limited land to actually build on, and there is massive community resistance to development. In fact, the expression NIMBYs, not in my backyard, I'm pretty sure originated in San Francisco. Anytime there's a development going up, you likely, as the person who's wanting to pursue that development or is initiating it, are going to be tied up not just in the permitting process, but in the local hearing process, where you're going to hear from countless people objecting to your project, either because they have way too much time on their hands or they have a legitimate concern, and San Francisco provides a platform or a soapbox for anyone anytime to voice their concerns. That's a good and a bad thing, but when it comes to development and bringing things to market, it definitely is a frustrating point. Let me share an example from a recent experience. So years ago, I was part of a community board that was really advocating for a restaurant in the neighborhood that I lived in, which was the Marina, and a bunch of us 30-somethings all got together to help basically lobby the city and allow this restaurant to build a deck where they would be able to offer additional seating to their patrons. It was a fantastic restaurant and something really welcomed on Union Street. And with more business and more people paying that establishment money and sales tax, you get where I'm going with this. It impacts and affects everyone in a positive way. Not to mention the restaurant would be able to hire more workers because they have more capacity and they're serving more customers. You guys get the point. But a lot of people who have basically been dinosaurs of that neighborhood, and I mean that in a respectful way, meaning they have been there generationally, or they grew up in that neighborhood and now they're well into their 70s and 80s and they don't want to leave, objected to this. And they said that a deck that was going to be built outside of a restaurant that was more of a sports bar, but it was a pretty fancy one, to be quite honest with you. The food was bougie and it was really expensive. So you could call it a sports bar. I just happen to call it a very fancy restaurant with a lot of TVs to watch football in. But these people were objecting to it, saying that that kind of noise would actually deteriorate or cause deterioration within that neighborhood and ultimately repel citizens and locals from wanting to be there. It would also encourage a lot of binge drinking and people would be just passed out on the sidewalks. I mean, these were somewhat legitimate concerns, but these NIMBYs tied up that project for well over a year from being able to come forth. Now, the owners of that restaurant, and I was not an investor, but many of my friends were, this impacted their capital because it was tied up for a restaurant that could not actually bring in $1 in alcohol or food sales yet because they were tied up in this actual hearing process. So that's an example, and that's one of thousands of them, but this place is notorious for that. And anyone who's working in this market or is an entrepreneur in this market is obviously well aware of it, but if you're new to this, you need to keep that in mind. So let's do another dive back into those actual local numbers. The average days on market that a home will be on for is roughly 19 days. The number of offers that a home will receive typically in San Francisco is around 5, and current inventory levels show that while inventory has ticked up just slightly, we are still at record lows for a San Francisco cycle. So these numbers tell the story of extreme competition, but it's also varied neighborhood to neighborhood because a lot of that inventory that's been sitting a little longer and continues to remain on might be specifically in one area and it's not going to be the same in another area. So if you're reading numbers from the outside looking in, know that that does not apply to San Francisco on the whole, but it's very specific to the neighborhood or the enclave. Because again, for example, as I stated earlier in this video, the Sunset District will see homes fly off the shelves in a matter of days, whereas some of the luxury markets, it might be over 30 days. Now, the tech industry abandoned this area in large part because a lot of those companies left. Many of them were not requiring people to come back to work. So a lot of these workers that did used to live in the city outside of their social lives, so they moved away. So with the tech industry being the biggest wild card for the market, and despite a lot of recent layoffs, there's still been a strong amount of demand in 3 main key neighborhoods of San Francisco. First is the Mission District with a median home price of $1.3 million. Pacific Heights is up to $2.6 million, imagine, for a median home. And other emerging neighborhoods like the Dog Patch. So the real question is, how might these Trump policies actually affect those numbers? So the luxury market, which by San Francisco standards is considered 2.5 million or above, that is the area or the segment of the market where homes are sitting the longest, in many cases over 30 days. The mid-range, which is 1.3 to 2.4 million, just under that luxury level, is the most stable segment of the market. An entry-level homes, which is anything less than 1.3 million in this market, is gone within days. That's the highest block of actual demand for this city because many new couples or first-time buyers, that is their sweet spot of affordability. So when they want to get their first home, recognizing that it won't be their last home, that is the type of inventory that they're chasing. But what's fascinating about all those numbers is how that competition varies neighborhood to neighborhood. So for the next 6 months, here's the short-term outlook. We're probably going to remain in a rising or slightly elevated mortgage rate environment. And rates might get a little bit higher before they eventually come lower. We're still expecting just under 4% price acceleration or growth, and the inventory shortages are going to remain fluid, meaning they're not going anywhere. Now, looking 1 to 2 years out, here's the midterm impact. Zillow is predicting a 4.2% price increase by late 2025. New inventory increasing by just under 12%, and the tech industry hiring patterns continuing to shift. Also, you have AI that's replaced tech in many areas, and so they're bringing about new workers to this market, which are eventually going to be the people that habitate the housing. But San Francisco has historically defied national trends. But let me show you some numbers why this particular cycle, it might be a little different. And that all has to do with the long-term vision, which is 3 to 5 years of an outlook for San Francisco. As I mentioned earlier, the tech industry is evolving, and replacing tech is now AI. They are taking out millions of square feet of office space in downtown San Francisco and other corridors like Soma. There are really broad and far-reaching new development projects that are hitting the map here in San Francisco. And there's also a policy implementation timeline where the permitting and building process is hopefully about to get more streamlined. So here's your buyer strategy if you are one of those people looking to buy property in San Francisco this next year. 2 real things to consider. First of all, consider buying a condo and recognize that the first home you buy is not going to be the last. You want to get a good starter home, especially keeping your maintenance and responsibilities down as you transition from a renter to an owner. The best way to do that is to enter the condo market, where these units are now attainable at a huge premium, in many cases at double-digit % discounts from where they were at off their highs. Also, you want to focus on emerging neighborhoods like the Dog Patch that aren't as high priced, but there's a lot of upside there, because getting into a condo in one of those particular neighborhoods like the Dog Patch, sitting on it for 3 to 5 years, then taking that equity or upside and rolling it into your next home, which might be your semi-permanent home, is the right way to do it. Now, for midterm buyers, meaning people that are potentially looking to move up, particularly in that $1.3 to $2.4 million space, you want to target transitioning neighborhoods where there's a lot of development coming in, gentrification, if you will, because these homes will offer a nicer way of life, more amenities, and with that comes in more outside dollars that are going to invest into those communities. And if you're trying to break into the luxury market, you want to look for and find motivated sellers. And the reality is most people that are selling in a luxury market, especially this particular market, are doing so not because they're testing the waters of profitability. They're doing it because they actually have to. They've either lost a job, there's been a death in the family, there's a divorce, they're downsizing, they don't need it, there's some type of familial spat, whatever it might be. Most of those sellers are going to be very motivated, which means you could strike a very good deal if getting into a luxury property is your desire. Now, if you are someone who's on the other side of the equation and you want to sell, timing is going to be very critical, and it's important that you listen to this. You want to take advantage of the fact that there's not a lot of options for people to choose from. And if you price and package your property appropriately and you get it ready to bring to the market, it's going to move quickly. Now, if you're not planning to sell for several months or well into 2025, here's the advice for you. You want to consider making specific improvements, since there's obviously a few more months on your specific timeline, but also start preparing for increased competition, because more inventory is expected to hit the market as the economy undergoes whatever shift is lying in store for it. And if you're an investor and you seek investment property or putting your money to work for you here in the San Francisco market, here's what I'm seeing. Emerging neighborhood potential remains vast. Because this is such a land restricted and inventory tight market, if you put dollars to work here, and because everyone needs shelter who lives in San Francisco, of course, the market for owning rental properties and also the rents that it receives, because rents have been on the rise here for quite some time, offers investors a lot of yield. So there are lots of good income producing strategies here because of rising rental rates and the fact that if the mortgage market is tight in terms of inventory to choose from, high borrowing costs such as high mortgage rates, continuing to rent or starting off as renting is going to look appealing to a lot of people, because it is cheaper in San Francisco to rent than it is to own. It wasn't always like that, and there's been moments in time when that's actually flipped, but right now at present, it is cheaper to rent than it is to own. Obviously, there's a lot of upside and possibilities and benefits to owning, but just dollar for dollar and staying in the present, it is cheaper for a lot of people to rent. And if you're an investor that wants to own a rental type of property or multiple units that you could rent out, this is a huge advantage for you. The other thing to keep in mind if you own investment property here in this city is that there's so much development money coming in from outside capital sources that are developing either very cool retail concepts, way of life, real estate projects on their own. And with that money brings about all kinds of economic activity into those neighborhoods. And if you own property or you're seeking to get into one of these neighborhoods, this will benefit you. So So here's what we've covered in this video. We know that specific opportunities are happening in specific neighborhoods, like the Dogpatch or other emerging neighborhoods in San Francisco, and that's where you want to be keenly focused, as well as the condo market, which those units right now are being sold at a premium or a huge discount. Trump's policies very likely will reshape our market. If we do eventually get lower mortgage rates in this country, that's going to stimulate a whole new wave of demand. Obviously, a lot of units are coming to market which have nothing to do with Trump, but the city itself. And if you get lower borrowing costs, more demand, and more units hitting the market, you're going to have a perfect storm for a huge economic boom in the real estate space. Now, local factors are going to amplify or moderate some of these changes, such as what is going to ultimately happen with AI. Are they going to actually bring in more workers, or is a lot of this office space just being taken out for the actual technology itself or to store servers? Time will tell on this. But if the latter remains true, which means more people actually come in by way of all this AI office space takeout, you're going to have a lot more people coming into San Francisco that need a place to live. Many of them will be buyers, but the vast majority of them will probably be renters. Now, I've created a specific guide that breaks down the advantages in a lot of the different neighborhoods here in San Francisco. And if you'd like a copy of that guide, just look below in the comment section and you'll be able to download it. Now, the next 12 months or all of 2025 is going to be highly crucial to not just our national markets, but right specifically here in San Francisco. If me and my team can be of help to you in helping create a budget, analyzing various neighborhoods and seeing what investment opportunities are out there, whether you're seeking to buy a rental property to rent out to someone else, or you're looking to buy that primary residence for yourself, for you and your spouse, you and your partner, whatever it might be, feel free to reach out to me and my team directly through Instagram at Arjun Mortgage, where we will get the opportunity to serve you, and it's a privilege and can help guide you in any way you need. I've done it for thousands of families over the last 2+ decades, and as I mentioned, it would be a privilege and honor to help you out anytime. Now, if you want to make me accountable and hold me, or hold my feet to the fire, not hold me specifically, but hold my feet to the fire and make me accountable to these predictions, make sure you click like to this video or subscribe to the channel so I can report back to you and see if we were right about some of these predictions and outlooks for what a Trump administration is going to mean specifically for the San Francisco Bay Area housing market. I look forward to seeing you guys on the next video, and good luck with your investing.